Cybertruck launch, in fact, is expected today, 3 p.m. Eastern, at the company's Austin Gigafactory. How big is this for Tesla in the short and longer term? Toni Sacconaghi is Bernstein's senior research analyst, joins us now. He's negative on the stock. His price target's 150. All right, so that being said, Tony, I would expect perhaps that you're not overly excited by what the Cybertruck is going to do for Tesla?
Good morning, David. Look, I think the Cybertruck, even by Tesla's own admission, is likely a niche product. It believes when it's fully ramped, it might sell 250,000 units per year. Tesla's doing close to 2 million. They have ambitions to be 10 or 20 million in units. So in that context, it's not a make or break car for the company, and even by the company's own admission.
Yeah. Will they ever make money on it? I mean, Musk has talked openly, of course, about the difficulty of actually manufacturing this vehicle, given the stainless steel exterior and how hard it is to manipulate. Are they ever going to actually see a margin on this thing?
We'll have to see. I think it's going to be very tough over the next year. We think gross margins will likely be around zero or maybe less, which means on an all-in basis, on an operating basis, the company will be losing money on every Cybertruck they sell. I think it really depends kind of where demand is and where Tesla settles at price. They had announced this car 4 years ago, saying it would start at $40,000. I don't think there'll ever be a Cybertruck at $40,000. But at $100,000, they have a better chance of making money than $70,000. So part of the equation is where they'll price it and how much sustained demand there will be for the car at that price.
Earlier this week, I think you put a report out, of course, Tesla versus BYD, making the point that one has a $90 billion market value, that being the leader in China in terms of EV, and Tesla, of course, at $750 billion. Given your price target, I think our viewers know where you're inclined. But, what about the other parts of the business in terms of achieving level 5 autonomy, in terms of robo-taxis and what that may mean, supercharging, and just all the other technology, perhaps, that Tesla has that other car companies don't?
Yeah, David, I think that is really the big question, and certainly the reason for the valuation discrepancy between the two companies. I don't cover BYD, but my colleague does, and our estimates for BYD and Tesla next year are actually quite similar in terms of revenues and profitability for the company. So clearly the market is ascribing value to Tesla's other businesses. And certainly I think their software portfolio is, miles ahead of BYD's. And so you get to this question of what does that software and other innovation portfolio translate to in terms of value? And the market is saying, about $600 billion worth of incremental value. And we struggle to come up with that number, quite frankly. We think Tesla will bring lots of innovation, as it has to date, in terms of software. But particularly full self-driving, we think it will take longer to occur. It's multiple years away, both technically and from a regulatory perspective. And we don't think Tesla's going to be the only one to do it. So Tesla charges $12,000 for full self-driving today. Not many people buy it. But I think over time, let's say Tesla gets there, others will get there, and prices will come down. And therefore, it's really hard on sort of a modeling basis to come up with, hundreds of billions of dollars ascribed to that service or to other services.